Hi there, crypto warriors. Welcome back to Jack Reddington's channel. Jack's still away, so you have me again, your favorite guest host. Today we've got an exciting and bold scenario, turning a tiny $1 trade into a whopping $1,000 profit using 300x leverage. Possible or pure fantasy? Let's break it down step by step. If you haven't subscribed yet, make sure to hit that subscribe button and stay tuned for more awesome trading insights. Quick disclaimer. This video is purely informational and entertaining, not financial advice. Always do your research and talk to a financial advisor before trading. Understanding market shelves. We've all seen it. Those incredible moments when crypto assets spike dramatically upwards, for example, from $1,500 to $3,500, or fall significantly. During these rapid movements, price moves through trading channels, one by one, with clearly defined upper and lower boundaries. And guess what? There's a strategic way to significantly benefit from these opportunities. Entering small and scaling up. Step-by-step strategy. Here's how the strategy works. Initial entry. Begin with a tiny $1 trade using high leverage, like 300x. First growth stage. As your profit grows modestly to, say, $30, cautiously double your position to $2. This reduces the distance to your break-even point. Incremental growth. When profits climb further, maybe around $60, double your bet again to $4. Each increment reduces your break-even further and increases your profit potential. Rinse and repeat. Continue this careful doubling up approach at strategic profit intervals. At $140 profit, increase to $8. At $200, double to $16, and so forth. Only after ensuring a solid market move upwards, and most importantly, honoring the trading channel's upper and lower boundaries. Strategic use of stop loss. Vital risk management. It's important to note here, this strategy demands careful management of a hard stop loss. Mental stop loss won't work here. Why? Rapid market growth often includes temporary pullbacks. A properly set stop loss protects you from significant losses or liquidation, since very quickly you move from a comfortable small trade to a large bulky bet that can wipe you out instantly. Ideal positioning of your stop loss is above your break-even point and approximately 30% below the bottom boundary of the current channel. But why? Because if positioned closer, the exchange's algorithm will see it and trigger it prematurely with a candle shadow. Keeping it 30% or more below minimizes that risk and safeguards against market manipulations. Managing risks and avoiding common errors. Here are some golden rules every trader should follow when using this strategy. Stay calm. Emotional control is critical during rapid market movements. Avoid FOMO, fear of missing out. Crypto markets regularly offer significant opportunities. Don't panic if you miss one. Tomorrow there will be another opportunity. Don't get greedy. Allow the market to fluctuate naturally. Give your trades room to breathe and avoid constant adjustments that increase risk. Step away if needed. Feeling overwhelmed? Set your stop loss comfortably and take a break. The market will still be there when you return. Realistic profit expectations. With this careful, incremental approach, your small $1 bet can steadily grow into a substantial $100 position. Leveraging at 300x means it doesn't take significant market movement to reach profits of $1,000 or even more. Moreover, with this correct setup, you're practically minimizing your risk to nearly zero. This contrasts sharply with the considerable risks you'd face by starting directly with a larger initial bet, like $100. So can you realistically turn a $1 bet into $1,000 using 300x leverage? Absolutely. This strategy is commonly used by professional traders during highly volatile markets experiencing rapid growth or decline. Many traders step away during such volatility because analysis becomes challenging, and they're absolutely right. However, if you're prepared and disciplined in managing your stop losses, this could be your golden opportunity. But remember, this isn't gambling. Even we at SignalCLI, usually proponents of mental stop losses, emphasize the critical need for hard stop losses here to prevent liquidation. And since hard stop loss doesn't guarantee execution exactly at your set price, it only ensures the exchange will attempt to execute it at that level. You gotta follow two simple rules. 1. Maintain your stop loss above your break-even point, and 2, at least 30% below the current channel's lower boundary. Enjoyed this breakdown? Smash the like button, subscribe for more trading wisdom, and drop your thoughts or questions in the comments. Jack, hope you're watching. We've got this. See you all next time.